Whenever there's good shorting to be had, this setup is usually at hand. So here you can see on the 5-day 15-minute chart on Zoom, we made 100% of our previous upward swing, and then we started to sell off and sell off. So once you've made your 100% extension of a previous larger swing and you start to break down through that 100% band, then you move your extension off of your lowest low. So initially that would have been this. Okay? So when you see we're moving up off this low, we push up, come down, make a higher low. You could have determined this is the lowest low, and you move that extension off this point. Now you see a failed 282 extension with a downtrending VWAP. So you could have taken a short position there and swung it down to here somewhere. I guess you could have determined profit targets by looking at a previous high to low swing. So you can see we make 100% of our previous downward swing. Okay? And at the very end you see downward swings getting a lot smaller, so maybe you're losing selling pressure. This was a 4% move. It's pretty safe because you have a downward facing VWAP and you have signs of lacking strength here, and you really fail to break above this 282 extension. So we easily make 100% of our previous downward move and then start to push up again. Okay, so when you start to push up off of a new low, you can activate this again and move it off the low. And then you see upward swings getting smaller is a sign that you're losing strength. Plus we have you have failed 282 extension. We do break above it, but we close below it, and then we close below it one more time. So now that you know you're heading down, you activate your previous downward swing, and you easily make another 100% of that. So that's another 5%, 25 bucks. So those puts would have paid fast. And it would have been very low stress because the play worked right away. You could keep a tight stop loss because bouncing off of this or moving in another upward direction off of this, you would have cut that trade. So this trade is good because it works right away, pays off pretty well. You have decent downward swings before this, so you know the relationship from this downward swing to our previous downward swing is going to be fairly awesome. I would have taken profits at the 282, 618, and 100. When you see another spike up, you could see another failed 282. But these downward swings are getting much smaller. Okay, if you look at these things, if we move this, you can see now we're only making the 618. So our downward swings are getting smaller. So our selling pressure is losing momentum. And if we added a 282, and you activate this, you can see now we're just making the 282. So our downward swings have gotten smaller twice, and this might start to turn into a good long setup. Anyways, that's how you can find a good short play with a failed 282 extension of a much larger swing, plus a downward facing 50-day moving average and a downward facing VWAP as rejection points. So it's low risk, high reward, and you can tell the intensity of the move by its previous downward swings. So when you have $25 sell-off, say the next sell-off is going to be at least half of that, if not all of it, or larger. So I hope this helps you find some short setups using no indicators, barely any moving averages, just price relationships to previous upward and downward swings.